What do you say to the deflationist, for instance, Miss Shedlock, who's wildly bullish on gold and precious metals, but he, for instance, might argue the money is out there, but the banks aren't lending it, and they're tying it up in treasuries. Are we going to have to see money flow out of that reservoir, or is there just too little precious metals to go around and an awful lot of money sloshing around?
Well, there's an awful lot of money sloshing around and too few commodities relative to that amount of money, which is basically the conclusion of that article that I wrote that you were referencing earlier. So I think you're actually starting to see that reservoir as you describe it, which is really a good description, I think, of money coming out of that reservoir and going into things, and that's why commodity prices are rising. But, there's another big picture item here that I'd like to bring up, Chris, and that's that, I take Mr. Bernanke at his word. He says that he has a printing press and he will prevent deflation come what may. And, in fact, that's exactly what he's been doing. We had maybe 6 weeks of deflation after the Lehman Brothers collapse, but central banks around the world got those printing presses going, pumped up a lot of money, and that money is now starting to move around and look for a home. So I really see the inflationary pressures building, and I think they're going to continue to build as we go forward from here.
Speaking with Catherine Austin Fitts in yesterday's interview, and she mentioned that when she was touring, I want to say Gold Money's facilities in London, during the tungsten gold bar scare that occurred earlier in last year, you actually had all of Gold Money's bars melted down just to be certain of the purity.
We had all of the Gold Money bars in London tested with equipment in order to make certain of the purity. There were a few anomalous bars which we did have melted down, but they came back as stated on the face of the bar.
So that leads me into my next question. Growing concern over the major gold and silver ETFs, SLV and GLD, and then perhaps we could also touch on the Central Fund of Canada, CEF, that these may not be as sound as we believe, that there's a leverage and other paper machinations going on behind the scenes.
And I'd make a distinction between that group of names that you had, because the key is whether or not they do independent third-party audits to prove that the gold and silver really exists. SLV and GLD do not. Central Fund of Canada, Sprott Physical, on the other hand, they do the audits, and they do prove with third-party independent audits that the gold and silver really do physically exist. So if you have to own gold and silver in the form of a security, for example, because the tax-deferred plans don't actually allow you to own physical bullion directly, look at CEF, Central Fund of Canada, look at Sprott Physical, and look at Central Gold Trust. I believe the symbol is GTU, and the symbol for Sprott Physical is PHYS. These are, based on my analysis of the prospectus, funds which do actually own the physical metal and have it sitting there in the vault and have it verified by independent third parties. So those are the only three that I would recommend.
I wonder if you might speculate how the Fed would be likely to fight the inflationary or the hyperinflationary flames or fires as it becomes more apparent to the general public just what's going on here. Do you think that their prescription this time, or increasing rates, will accomplish what occurred in the late 70s, early 80s, or will this time require a stronger panacea?
That's a really good question. And you have to look at what Bernanke's doing versus what Volcker did when he came into the Federal Reserve to solve the monetary problems that we faced back in the 1970s. Volcker raised interest rates because he had to reestablish confidence in the dollar, which had been badly beaten. Pretty much this decade, the dollar's been in a long-term downtrend line, and interest rates have been generally lower, not higher, and here we are at basically a zero interest rate policy in the dollar. Bernanke's not doing anything to establish confidence in the dollar, and as a consequence, the dollar is falling not only against commodities, but even against some of the other fiat currencies out there. The dollar's weak again against the euro, as an example. So, in the absence of not raising interest rates, which is the only way you can instill confidence in the dollar and increase the demand for it, you have to assume that the dollar is going to continue to be debased. The interesting thing, though, Chris, is that Bernanke can fight deflation very simply by just doing more quantitative easing. What's really hard to fight is a lack of confidence or a collapsing confidence in the dollar. The only way you can fight that is by raising interest rates, and he's not going to do that for the foreseeable future because he thinks it would destroy economic activity. So he's really sort of playing a game here, making a bet that by keeping the dollar weak, he can restart economic activity. But in fact, what he may be doing is destroying the dollar, and if he does that, he destroys economic activity as well. And that's the basic view of the book that John Rubino and I wrote, The Coming Collapse of the Dollar. We just don't see central bank policies preserving the worthiness of the dollar this time around.
And I think that's a great segue into where folks can find out more about your work and Gold Money. I understand that there's a new edition.
Yeah, the original book came out in 2004 called The Coming Collapse of the Dollar, and then the paperback version came out just about 2 years ago now in a changed title called The Collapse of the Dollar because of what had happened over the intervening several years. The interesting thing about the book is that it's written from the point of view that if you want to learn about money, banking, precious metals, and things of that nature, a lot of the information in there is really sort of timeless. It's almost like a textbook in that sense.
And I want to wish you a safe and profitable week ahead.
Thanks very much, Chris. It's always a pleasure to speak with you.